Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for August the 8th, 2016. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. This is just us group of traders trading live each day. We do these pre-market sessions and then we do live trading and analysis during the course of the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so Friday we ended up getting a P-shaped profile. Basically, we had three main hypotheses. Our first hypothesis was a open auction outer range, a move down to test the 64, and then somewhere between the 64 and that naked V pocket 59, maybe the value area low, find initiative buyers and rotate up through and go and take out that 72, 75. That was our main target for most of our hypotheses, is that takeout of what was the all-time RTH high. Our extended target was the Globex all-time high at 77.75. Hypo 2 was a move up to test the 72.75 and then fail and rotate back down and take out that 64 and that 59.75 naked VPOC. And then Hypo 3 was an open auction out of range or an open drive and a push-up chop around in the 72, 75 to 75 area and then go up and take out that 77.75 and put in a new all-time high in the RTH. And Hypo 3 was basically what was played out. I didn't have a great trading day because of the fact that I thought we were in Hypo 2 and I sold up. My last sale was around 74, 75, and then I ended up taking it down for a loss and then getting long off of the touch of the VWAP and made the majority of my money back, but I still ended up with a bit of a down day. No biggie. But it chopped around the rest of the afternoon. There was nothing I could do. I just ran out of time and there was no trade. News today, we had the building permits. What did they come out for Canada? Ooh, very bad. I mean, the last economic news for Canada has not been great. The unemployment and the budget was, or trade imbalance was bad on Friday. Now we've got a really bad miss on building permits. Expected 2.7 came out minus 5.5. Rest of the news today, we've got 10 a.m. Eastern, we've got the labor market conditions index month over month, and that's about it. It's very late news day today. We're still in earnings, so look, there's not a lot of earnings to look at today. Tomorrow and the rest of the week, we've got some big names coming up. But as far as scheduled news today, we've got very little. So let's just step back and take a look at the macro to micro. Just so that you know, Marvin and I were talking about this. We're watching how this potential cup and handle plays out. We did get the FUBAR Mr. Sneaky. The tech gap close will take us back down to 1339.80 area. And then, of course, to validate the cup, we need to come down to that level or down to test the 20 down here in the 1337.36 area to validate the cup. And then we're looking for a right rim break above at 42.30, and we'll, if it sets up and it validates, we'll measure it. But just to give you an idea what the measure looks like, let's just do a quick extension in C. So it'll be up to here. And the primary target is going to be 1347 and extended is 1349. There's that 1349 I was talking about, Marvin, earlier. So we'll see how that happens. That's getting ahead of ourselves. So each morning I like to take a look at the macro to the micro. I start with a monthly candlestick with a 9 EMA, 20 SMA. All my moving averages you can see on my charts are 9 EMA and 20 SMA regardless of the time frame. And what we're looking for is slope and separation, where the trend, how strong the trend is, where it's being violated or challenged. You can see we had this wonderful multi-year upward trend, then end of 2015 they challenged it, beginning of 2016 they challenged it, but we're getting continuation pattern. We actually had a W pattern here. Actually, you know what, we can measure that too. Let's just take a quick look at that. So approximate primary target is, wow, 2303 and a quarter and 2423. Now that's still a pattern in development. I mean, if you would have taken the breakout on the W, the first target's actually 2227.50, which is not too far off of the daily, or sorry, the weekly 20-period ATR upside target, which is up at 2222.75 right now. Hey, that's interesting. Still, you always take in effect the time frame. This is on a monthly time frame, so it's nothing for it to come back. The pattern won't be violated until we get below 1798.75. So you can understand the context of the time frame of that pattern. But anyway, I'm getting ahead of myself. So we've got some slope and separation. Our month open key today, remember that our month open is at 2174. That's also the value area low from Friday. So you know, we're back into a bullish month above that 2174. Going to the weekly, we now are back above the weekly open. Our weekly open on the Globex was 2176. The last week open was 2174. So we had a higher open, and we're in a bullish week as well, as long as we hold above that 76. And you can see we've got 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7 weeks now of bullish weeks so far. Looking at the number, usually around 5 or 6 is the average when you have these strong pushes up, going back to the beginning of this chart, which begins back in 2013. So you know, you take a look at some of these: 1, 2, 3, 4, 5, 6, 7, then drop, 4 and drop, 1, 2, 3, 4, 5, 6, 7, and then drop, 1, 2, 3, 4, 5, 6, pull back, and then continue. But you know, we're getting a little bit long in the tooth on the weekly. We have this technical gap that is being created. That doesn't get closed out until we get back down to 2140.50 area. But we do have slope and separation to the upside. So you know, we have strength of trend. You know, we're making new all-time highs. Going to the daily, you see that we had this consolidation. They came back, tested the 20, and now they're went up and made new highs on the daily, an all-time new high. Now here we have another example of, we just put in a new all-time high on Sunday night. Remember that 2177.75 was put in last Sunday night. So now we have an unequalized high. Our all-time high in the RTH session is 2178.50, which we put in on Friday. Now we have an unequalized high again up here at 2183. Expect this to get taken out at some point in time. We have slope and separation, but it's not a lot of separation, so the trend, although is continuation, or we're getting continuation, it's still weak, and we could get a pullback right now. We'll close this little technical gap. Will bring us back up and back down into the 66, and our daily ATR continues to compress. Our 20-period daily ATR is 1645, and our downside daily ATR target is 2166.50, which will also come down and close this and test this 9 again. But the trend overall is up on the daily. Going into the intraday, you can see that we've got the strong trend up. We just went up, and we're getting a possible Mr. Sneaky. I wouldn't classify this as a foo-bar because it doesn't have the volume spike that's needed, but there is a possible Mr. Sneaky showing up on the 4-hour. Close of this technical gap brings us back to 74.25. That'll take us back to the month open at 74 area. Going to the 1-hour, you can see that we've closed this technical gap. We're now testing the 20 SMA, so the trend is being challenged right now. No naked crosses close by on the 1-hour. Going to the 30-minute, you can see that we've now closed below the dying in the 20, so the trend is being violated, and we're getting a possibility of a trend change. We're coming into some serious support here, which was resistance. So I'd be watching this level in the 77, 75, 77 area as a potential bounce zone. There was a really nice double wrinkle reversal that I took. I'll show it to you in a minute. Let's get through our basic analysis. So we got a possibility of a rollover, and again, there's no naked crosses on the 1-hour or the 30-minute to speak of either. Coming back on the 15-minute, we're getting slope and separation. We're getting start of a downward trend. There is a naked cross right here at 77.75, very key level, because remember that 77.75 was our all-time high that was put in Globex back last Sunday. So nothing for us to come back and test that level again, especially with the VPOC from Friday at 77. Going to the 5-minute, you can see that we're getting strength of trend. So coming into the RTH session, we've still got a half hour to go, but we're seeing a push down on the shorter time frames, but the larger time frames are still trending up. All right, so let's take a look at the overall structure. Oh, by the way, this was the double wrinkle reversal that I took right here. So I was short from 81, and I closed it down at 79 simply because I was starting this session. Friday, we put in this zipper right here, and this measured move, and the measured move on the zipper, if you remember, putting it in the room, was 80.25. We took out the primary target. The extended target was 83. We came within 2 ticks of the extended target. Now we're pulling back into this zipper area. So again, the middle of the zipper is 77. That is the VPOC from, we shifted the VPOC into the close, and I would expect the possibility of a bounce off of the 77 and a continuation up based on normal auction logic. Taking a look at what this looks like on the larger picture, we've got our microcomposite VPOC. The microcomposite VPOC is 2160.75. Just before the gap and go and the breakout day, we accepted value at the 59.75, so that's the last place that they accepted price before the breakout. So we want to be watching. Of course, it's just a point below the microcomposite VPOC, so you have to give that precedence. You've got the 67.25 CHVM composite high volume node is our value area high. So we want to watch that 67 and a quarter. If we get inside of that 67 and a quarter, I'd be looking for them to push through to test the lower side of this balance down here at 65.50. 65.50 is going to become our warning line for the day. Anything below 65.50 puts us below the range low from Friday, and likely a bigger pullback down to the 60.75, 59.75. 49 will remain our key line in the sand, and then our key support is going to be the 38 and a quarter, which is the beginning of this gap zone that we still have open. And again, anything below 38, I'm looking for a bigger pullback towards the 50% of the significant breakout candle down at the 21.1450, and a fill-in of these gaps that we've got open all the way down. The key target below, and I'm going to start again looking for a swing position short towards that 2086, 2084. I just don't know how high it's going to go, but I am going to start looking for a bigger pullback to come back and fill these gaps, and getting a little bit long in the tooth. But nobody knows how high this market can go. So taking a look at the overnight, so far our overnight is up at the new all-time high, which is a Globex all-time high, and our overnight low is down at 2176, which is the IB high from yesterday, Friday I should say. The VPOC right now is 77.75 overnight, but if we come back up into this area and we still have time, it could shift to 80.50. So, but right now we're nowhere close to being in danger of getting a VPOC shift. So I'm going to put the VPOC in at 77.75. And we have an LVN here at 78, but really you're going to be paying attention to the 78.50. And that's about all the information I need from the overnight session. So just bring this up. Look at our levels. Obviously, the range high at 78.50 is going to be one I'm watching. I'm not going to put a lot of weight on the 78 itself, the value area high, simply because how strong that 77.75 to 77 area is. You get the naked VPOC and the close. Our close was 76.75, and you got the overnight VPOC. So really, if we get below 78.50, I'm looking for them to push down into the 77 area and close out the gap and the naked VPOC and the overnight VPOC, and then possibly come down and test the 76 overnight low, especially if we leave this overnight high at 2183. Below that, our value area low is our month open. I don't want that. And then, of course, below 74, we get into this this thin area of the P-shaped profile. So we had short covering on the P-shaped profile. They squeezed the shorts up into that 77.75 and then closed on the high. We had continuation on Sunday night Globex up into the 83. We do have measured moves still at 85.50 and 87. Our weekly upside ATR target is all the way up at 22.27. Our weekly 20 period is running 46.75. so off of the low overnight. Not really a big number for us today because it's just the start of the week, but just so that you know where it is. Our daily upside ATR target off of the low is 2192.50. So we have range capabilities of getting into the 2192s. Off of the 83 overnight high, our daily downside ATR target is the 66.50, which puts us down to the range low from the prior day. This is going to be a key area for us because, again, I'm still surprised that we left the 64.50 gapped above it. We missed it by a couple ticks. What day was it that we missed it by a couple ticks? Right here on the 2nd, we missed that by 2 ticks, and then we missed it again by a point, and then we gapped over it and ran up. So this 64 and a core of 64.50 is going to be a key next big target below. And of course, we still have the gap open as well at the 63.50 for the range, and the naked close down at 21.59. And we got 3 naked VPOCs down in this range now. So if we get below this 66.50, I'm looking for them to travel down back towards that microcomposite VPOC at 60.75 and push through and take out these 3 naked VPOCs. Not saying it's going to happen today. I'm just trying to give you the bigger picture for the day. So levels below 74, our main target is going to be the 50% of the significant breakout candle. What did I do there? And then there's really nothing. We've got the 67.50, 67 and a quarter. And then, of course, this also, the 50% of the significant breakout candle, remember, that was our former all-time high at 72.75. So if we get below the 72.75, there's not a lot of targets here until we get down at the 67 area. There is the value area high too. So this is going to be a very key level for us to hold. And then if we get below, I'm looking for that move back towards those 3 naked VPOCs, 64.50, 59.75, and the 53.75. So those are the levels. Let's take a look at what our hypothesis is going to be. We still have 20 minutes, so we could open up in range, in value, because they're only a point away. But if we open up right here, my hypothesis is an open auction just in range or just out of range, a move down to the 77, take out the naked VPOC, naked close, and push through down into the 76 to 74 level. Somewhere between the 77 and the 74, I'm expecting initiative buyers to step in, rotate us back up through value, through range, and go and hit those targets at 81.75 and 83. I mean, how many times can our main hypothesis be identical? I mean, this is what we've been in for so many days, whereas the main hypothesis is a move down to find initiative buyers and rotate up through value and range and go and take out the all-time high. Our all-time high, remember, in the RTH is now 78.50, which we put in the high of Friday. So we're going to be flirting with the RTH all-time high. So that's hypo 1. Hypo 1 is a move down into range and into value, and then somewhere between the 76 area and the 74 area, find initiative buyers and then rotate up through into making a new high and testing 81.75 and 83 as the two primary targets, and extended up at the 85.50 and 87 with possibility of a late day probe based on the ATRs up into the 90s. All right, so hypo 2 is an open auction outer range, a push up, move into the 81 to 83, find responsive sellers and rotate back down, test the open, chop here, and then push down into the 77 with a late day probe down through value down to the 74. So hypo 2 is open auction outer range, push up, fail somewhere between 81.75 and 83, put in a possible new all-time high, or fail to do so, find responsive sellers, move down through targeting 77 and 76 with late day probe down into 74, possibly even down to the 72.75 to test the prior day or the prior all-time high before we put a new one in on Friday. Hypo 4 or hypo 3 is an open auction outer range or an open drive or an open test drive, but most likely an open drive, and a fail to get back inside of value, push up through, chop around in the all-time high, and then get a continuation wave up into the 2190s, possibly even testing the 2200. I doubt that it'll happen today, but it has to be part of our hypotheses because of the fact that we're now within range of hitting, we're only 20 points, 21 points away from that 22. So if we get a trend day, we get another continuation day on the breakout, 22 certainly has to be a target in one of our hypotheses. And then hypo 4 is an open auction, chop on the range high and value, leave the Globex high alone, push down into the 77, 76 area, chop in here, then push down to the 74, and then fail out of fall outside of value. Boy, I sound like I'm from Boston. A break out of value and a push down and targeting the 64.50 and closing down here and basically getting ourselves a outside day on the full session or a bearish engulfing day for the full session. So hypo 4 is a move, chop in the value and range high, fail, come down, close out those 77s, 76, come down and chop on the 74 and then get failure out of value and push through the tail of Friday and push fail at the low and come down and close somewhere in the 64 range. So those are my 4 main hypotheses. I'm sorry I went long today, so I'm going to skip gold. I kind of just want to check in to see where that pattern is on gold. See, we are getting that FUBAR. So we had a kind of a FUBAR, Mr. Sneaky. We closed down. We came down, closed that FUBAR. Did we validate the cup and handle? Come on. Yep, it's validated. So we do have a valid cup and handle. We put a double top in here. Watch this 42.30 area. I would really be watching for the breakout above the 44. Above the 44, you've got strong target into 46.80, 47, and then the extended target into the 49. We'll just take a quick look at what it looks like on the composite. 44 brings us back into the last 3-day value. We're chopping around the longer term microcomposite right now. We get above the 44. It takes us to test this, fill in this little CLVN that's forming here. And then if we don't hold and break above the rim, and I'd again be watching this break above 44, a pull back down into the 34 and possibly 28 area, and a failure of that cup and handle pattern. Where does the cup and handle get violated? It gets violated down here in around the 38 to 36. Anyway, that's going to complete our pre-market session. As always, well, I should talk about the Renko, sorry. Our Keltner center line is 78.50 so far. We're holding it. A move up to the upper Keltner is going to take us and make new highs above the 83. If we fail to hold the Keltner center line and move down to the lower line, it's going to take us down into that 73, more likely 74 by the time we get there, and testing the month open and the value area low from Friday. So that's my hypotheses and my analysis for the morning. As always, trade well, trade safe, and we'll catch you on the flip side.